It doesn't mean you're going to get it right. It doesn't mean I'm going to get it right. It just means that as soon as you realize you're in a choppy, range-bound market, especially with index futures, this is predominantly linked to just index trading. This is not a Forex idea. I don't like Forex, after noon, to be honest with you. Noon local time, New York. But if you noticed how we were just holding that range and ran up for the buy side, as I was outlining in the tweets yesterday, the whole context of what I was taking you through, a lot of traders just want me to, or students I should say, want me to just get to the point, give me a way to buy or sell, pick my entry, give me a way to determine where my stop loss should be, tell me how to move my stop, when should I move my stop, and give me a target. And without expecting that to be understood, because I've already done all of that. Like, that's already on YouTube right now. The problem is there's so many variables to how the market's going to book, present. What I mean by present, that it gives you opportunity, and sometimes it gives you these impressions that it may be a good day to trade, but then all of a sudden, as soon as you press the button, it does what it did yesterday, and it can be very frustrating. I can tell you, as a younger man in my 20s, when I first started trading the S&P, we didn't have these big ranges back then in the 90s. They were nowhere near the level of volatility that's available to all of us now. But the idea of getting in on those days like yesterday, when I was a young man, I would be in there trying to capture every continuation, bull flag, bear flag, the whole business. I would go after everything I possibly to anticipate the next run, but only on the upside, because I was a buyer. I didn't want to short anything. But I would literally blow my accounts out all the time with those types of days. So you have to know what leads to those events, so that way you can avoid it, or at least know that once you're in it and you've taken a loss or two, you have to learn how to stop. Like, you have to stop and not do any more trading. And when it's easy and the markets are real primed, and we're not primed to do anything exciting yet. I'm watching the charts as I'm talking to you, so don't think I'm not paying attention to it. When it's easy to see the market drawing to a particular high or a particular low, and it's one-sided, that's what I teach as a low resistance liquidity run. Okay, where you have just a real easy run to an objective. It's so one-sided, you can't even argue about the possibility of an opposite perspective. That is my definition of high probability. I get the question all the time, like, what makes a trade high probability? The fact that you can only really define it either in a bullish stance or a bearish stance. And using the concepts that I teach, it's impossible to sell it to yourself as a opposing opportunity. In other words, if you're bullish, if you think the market's going to go up, can you go in any way, shape, or form, justify a short using what I'm teaching you? And if that's true, you can find something that's short. That's not high. It doesn't mean that it can't still go up. It just means that it's not high probability. So when I'm mentoring my students, I'm teaching them to look for those types of setups. And the whole point of yesterday was not a high probability setup. And I told you, watch, they're going to build this up, take the buy side out, and watch the middle of the range, and it's going to occur between 3 o'clock and 4 o'clock. I don't know why these beta males out there that want to sit here on the sidelines when it's safe and not show you anything that they're doing this year, but they want to talk and chit chat. Go into the whole timeline of yesterday. And the real riders that were with me the entire day yesterday, yes, it was grueling. Yes, I beat your Twitter up. Okay. But you came away with now a measure of experience that you otherwise would have never had got without having gone through it. It's easy to get frustrated and say, you know what, I'm not anymore, I'm done. Or go in there and overtrade and not knowing what you're doing, and then walk away with a toxic view about the experience. Whereas yesterday, all of us that were together, we were walking through the entire daily range on a 1-minute chart. So that way we are reading the intraday volatility, how the market would likely reach for a liquidity pool. If it doesn't reach down for it, what's it going to do? Change gears. If it pulls back into a imbalance after it's left it, I taught you how to save your stop. Don't wait for a full stop out. Like, there was a lot of things yesterday that if I were 20 years old again, I would have really had a notebook out and pen and literally going through that whole thing again and with the chart. Like, I would still be doing it today, going back through yesterday's price action, reading everything into what I was outlining on the tweets, because that would have preserved accounts that I literally, with live money, blew out in the early 20s and in early 1990s. So when I give you these lectures and I talk about, the things that are going to be problematic, they're conversations that the young guys want. Like, you don't want that. You want to be in these big moves that capture a lot of movement, make money, and then parade on social media. That's not what I'm trying to inspire. I'm trying to inspire folks that have a sober mindset about the real risks involved in this industry, because it's easy to hurt yourself. It's easy to hurt yourself listening to anybody, even myself. So I have to pick my words carefully, because there's a few out there that just want to take anything they can take out of context and say, look, he didn't do this right, he said that, he didn't. But forgetting the fact that we talked about 3 o'clock yesterday being a short after the buy stops get taken out and go back to the middle of the range. They're not going to talk about that. But that was the whole point of yesterday's discussion. So as I mentor, as I teach, as I try to bring things to light with, the things that I use and implement in the marketplace, there's this large chasm, between hearing me or watching me display an idea conceptually versus really understanding what it is that is required to do it yourself. Because the analogy I use all the time, it's not like you watch the video and it's an instant download. It may feel like that. It may look like it's easy. It's not easy. It's not easy. When you're developing and you're learning, it's normal for you to have that overwhelming sense of uncertainty. That's a normal thing. I had that. I had that for a long time. Nobody was really cheering me on. I'm telling you that that's a normal part of this process, and trying not to get your attention on like the Instagram guys that want to promote the image only, that type of thing. I want all of you, at least in my target audience, is I want everyone to appreciate the underlying risks, because it's real easy to wreck yourself financially, emotionally, psychologically, and it's painful. And you can develop real mental illness from allowing yourself to be harmed in these marketplaces, because it's easy to just feel like, okay, well, I got time, I'm going to sit down in front of the charts. And if you applied that type of mindset yesterday, that was the whole point of walking you through it yesterday. I knew if I wouldn't have been talking or tweeting about yesterday, most of you would have been like, I'm done. They're just not doing anything, I'm bored. Some people were actually tweeting, say, there's no setup, I'm just going to leave. If you are not versed in understanding what you're doing in the market, number one, two, with what I'm teaching you, and you say, I'm not going to look at the market because the setup's not there, you're cheating yourself from real experience that's going to protect you in the future. I'm not always going to be here to point to where the market's going to go. I'm not going to be chit-chatting with my mentorship group, in the future when I can't do it. They're going to be left to make these decisions and lean on their own experience. So when I teach, I'm teaching an independent thinker's approach where you're not handheld with me. I'm not trying to glad hand with anybody. I'm not holding anybody hostage. My intent is for you to be able to look at the things I'm teaching you, go through the experiences and endure the things that are required for you to get a better understanding of what it is that's required to participate in these markets. But the importance is you have to go through these long periods of boring price action and looking at things that aren't necessarily going to put anything in your pocket immediately or take anything out. That's the main plus. That's an advantage. So when you're just observing and you're tape reading, not even demo trading, like there's a lot of you that are pushing the button already with live accounts saying, yeah, I made this I.C.T, I did this with your mentorship. That's cool. I get it. You're excited, but I've already mentioned many times, none of you should be doing that yet. Like, we have not had enough time from me first starting teaching this whole thing. I think what was the first lesson in February or something to that effect. It was really early in the year. All of you should still be in the observation and maybe just starting to work into forward testing. But forward testing is not pressing a demo. Like, you got to be sitting down in front of the market and tape read. Make annotations on your chart without pushing a button. Stop thinking about how much money you're making or losing, and stop thinking about all the opportunities that you're missing. Things repeat. That's some of the better takeaways from sitting down in front of the charts and reading price on a day-by-day basis, because then you'll be convinced rather quickly that there's an ample amount of opportunities over the month. Stop thinking that you have to trade every single day. If you beat yourself up and not know what you're doing, and you overtrade and or push, like, I would like to see that 38.55 level swept. It would make sense to do that. But the market can stay in a range bound condition or trade higher and leave that there. It could be there for months. Nothing says it has to go down there right away. I'd prefer it. And right now, if you're looking at your, let's see, on your E-mini S&P, let's go into a 5-minute chart.